Hello and welcome, everybody. This is the Hot Corner Insider Live Strategy Session. I'm your host, Steve Straz. I'm the Director of Research at All Star Charts. We do this every week on Wednesdays at 1 o'clock Eastern Time. Talk about some of the big insider transactions that we're seeing, do a little bit of global macro top down, talk about the latest developments, and then we dive in to our favorite chart setups in names that have seen some very bullish insider activity. So you guys know what we do here. Nothing we discuss constitutes any solicitation to buy or sell any security. This is all solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, stockmarkettv.com/terms. No intro today. How about that? A lot of times, maybe we'll do a light one or keep it short because we're busy. But this is as intentional as it gets because I cannot emphasize enough how important this one chart is for the entire market right now. So I could have brought you a chart of the Russell 2000 and said, oh, look at this. It keeps failing at 200 and struggling at 200, or NASDAQ equal weight, or XLF financials running into overhead resistance, or transports diverging from industrials. But any piece of bullish evidence or bearish evidence that I could have brought would really dwarf in terms of importance when it comes to this chart, at least right here, right now. I would have told you this was the case yesterday. But now today, after the Palo Alto report and the sympathy selling that we're seeing across the cyberspace, I feel even more strongly about this. The way NVIDIA reacts to its earnings, which are going to be a beat, they're going to be incredible, right? We know the report's going to be excellent. It's the reaction, right? It's that question of, what's enough? What does the market need to see to be happy at this point? Expectations are sky high. This is no longer 2022 down here, NVIDIA trading around $100, where they could have said anything decent, right? And their stock would have rallied. Very different place where we are here today, 7 times higher. Price is around 700 now today. After a 7x off those 2022 lows, now they got to say a lot of good stuff, really beat and really impress. Expectations are sky high. Talked a little bit about valuations on the morning show today. Willie came on. He likes to talk about earnings revisions. So while I'm not saying this bull market can't continue to rage on, and I think it will, we're in a different place, a far different place than we were a year and a half ago or even a year ago, right? A lot of good news is now baked into the cake. Back at the lows in late 2022, investor sentiment was at bearish extremes that we haven't seen since the financial crisis or even before that. Could have said anything, just halfway good, and gotten a positive reaction. Not like that today. Palo Alto, a little bit of a light guide, some light guidance, down 25%. Now, this could go either way. NVIDIA is like 10% off of its highs from just a few days ago. NASDAQ 100, growth space, tech space, the AI trade, super micro, they've really come off. Is that a warning sign? Maybe for what's to come this afternoon? Or did they come off enough? NVIDIA comes out, drops another great report, and undoes all this damage and everything. It's right back to big cap tech rally, and everybody's chasing these guys again. We'll see. But this is the chart right now. This is going to drive, what these large caps do and the large cap indexes do for the rest of the week. There will be rotation beneath the surface. Is it going to be the end of the world if NVIDIA misses? and we get some real selling in big cap tech? I think the answer to that question is all about, well, how's healthcare doing? How are materials doing? How are the biotechs doing? The banks? Financials look great. We're going to talk about it in a little bit. Right? Do other groups pick up the slack? We'll see. We're seeing signs of it right now. We've been talking about commodity stocks, Nucor, steel stocks, energy stocks. Some of these energy stocks just look great right now. Big run over the past few days. A lot of the best ones are extended, but the best ones are breaking out. The best ones are leading. So does that rotation, take place in a real way where maybe tech sells off a little bit, but the rest of the market picks up the slack? That would be healthy. So we'll have to see. But NVIDIA, 730 is that level. Our target was just hit. If you've been in this one for one target, two targets, three targets, you're good, right? I don't think there's any real reason to press this here. If you get some real weakness, 493 is a level. I know it sounds crazy, but where is my Palo Alto? Let's find this Palo Alto. Tell you why I'm saying this. Palo Alto missed and is right back here around this 260 level today. Right? So crazier things have happened. See what happens tonight. Advanced Micro. I'm in it. Got to hold. You do not want to be in this if this coil resolves lower, and we are flirting with that right now. 164 is really that level in AMD. This thing digs in and resolves higher from this flag. 230, I really like this one. There's Palo Alto again. My dad texted me today, I'm going to buy this dip. I said, yeah, 260. Great, go for it. CrowdStrike too. This one's on my list. I might be in this by the end of the day. I really like the setups in these leaders against those prior cycle highs. And I think you could play them either way. Like we just had our analyst call and JC's like, I love shorting these patterns. I could see that. If you're bearish, great place. Short something like this, define your risk, bet on a failed breakout, probably get a fast move lower, NVIDIA misses, another couple days of selling in tech, that could be a great trade. I don't want to make that bet simply because that would be a drastic change in character from what we've seen since early last year. And we've seen again in a really big way just off of the October lows where any little bit of selling pressure in these leaders and these big tech stocks, it gets gobbled right up. They buy it right up. So while, yeah, you could bet on a failed breakout here and get short, you're betting on something really changing that's been in place for a long time, right? That's the trend right now, buying dips in these leaders. So CrowdStrike back against this, 297-ish level? I really like that. And they'll be more insulated, right? It's the AMD stuff. It's the real AI type stuff, the super micro, Broadcom. They're going to move big in sympathy tomorrow. ServiceNow, if you get weakness back towards the 700-ish zone, those 2021 highs, love this stock for the long run. Now against 700, target 940. Meta, high and tight up here. High and tight. You're looking for an entry. Play this flag, right? Just the resolution of this coil. The trend is undeniably higher. What a monster this one's been. 5x off the 2022 lows. We're talking about 5x, 7x in stocks like NVIDIA, Meta. These are some of the largest companies in the world. So the trend is undeniably higher, but my God, look where we've come from. Right? So this, 25, 30% sell-off in Palo Alto, just zoom out on the chart. The primary trend's not broken at all. right? So there could be some big give back here, even in the context of the long-term underlying trend. Meta, really, that level's 387. But if this thing breaks out of this flag, you can run it back to or run it to our price target of 570 from here. I like this one. Bought some Google today. 140, right? I like this shelf. The shelf of pivot highs from Q4 last year, even summer of last year. Really like that. And the bet I'm making is simply, why won't Google end up looking more like Meta or ServiceNow, CrowdStrike, right? And get back above those prior cycle highs. That would be a lovely trade from here. That's all. Amazon, congratulations. They finally made it. They've been so patient. How this stock was not put in the Dow as soon as it split its stock a few years ago, I don't know. The Dow has a mandate that's trying to be the best representation it can of the U.S. economy. And in my opinion, there's not a better representation of the U.S. economy or consumer-driven economy. Where do we all consume the most? Most people, at least. Amazon. So I think it was a no-brainer. Congratulations, Amazon. We're close here. Nothing actionable here. We got to get above this shelf of overhead supply. If and when we do, I think that'll be a great place to define or redefine risk for a long trade. Uber got added to the Dow Transportation Index, immediately becoming the largest component of that index. And they booted out JetBlue, which thank God, because we were talking today in our analyst meeting. I was saying, do transports really give us the information that we need and want anymore? Because they got all these airlines and Avis and some of these like rental car companies whose charts are just terrible in that index. I think we're going to make our own transportation index. We're not just going to pick the best looking charts. We're going to pick names that should be in there, right? FedEx, UPS, some of the rails, Old Dominion, some of the truckers, U-Haul, Uber, right? I think we could do a better job. Too many airlines. Uber, no man's land here. Just wanted to give them a shout. So congrats to Uber and Amazon. Now for the banks. I like them. I like them a lot. I like the action just here today. And it's really the big six. The big six looks so good. JP Morgan, we've been saying for weeks now, I will not just be a whole lot more comfortable owning banks or adding bank exposure. I'll have a lot more conviction adding bank exposure in a world where JP Morgan is making a decisive breakout above those prior cycle highs, right? And starting to look more like the NVIDIAs and the ServiceNow and the CrowdStrikes and the Ubers. That's what we want to see. That's step one, right? For us talking more about and looking for more opportunities in the financial space, namely the banks. So this level's huge. Industry leader, the best way to play the banks over the long term. 173 in JP Morgan, perfectly actionable right here, target 217. Talk about some of the other big six names. This is Wells Fargo. 49, you got a really nice base breakout level there. It was sloppy, really sloppy, getting out of here. But the candle we had the other day, just a decisive move above the pivot highs here. So you can use that level too, right around 51 for an entry. And want to run that back to those 22 highs of 60. There, 66 will be our secondary. Wells Fargo looks great. These are the same patterns, right? Textbook trend reversal that we've been buying in everything else. Why should we treat the banks any differently? I don't think we should. People have been talking, the banks, one of the worst groups this year. Well, yeah. We know what happens now when a community bank or one of these regional banks comes close to, blowing up, having balance sheet problems like New York Community Bank had. We saw it twice last year, now again this year. And that creates weakness throughout the whole space. I think they've been pretty resilient, all things considered. Citigroup, Another one of the big six. This is the VWAP from the highs from a few years ago. Coming in, battling with it right here. Coiling, 54 and a quarter. Got some pivot highs from middle of 22, early 23. Buyers back in control. This is where you enter this one, right? Early stages of a trend reversal. Path of least resistance is now higher. 54 and a quarter is the risk level. 64 and a quarter would be target one, and then 80 back at those old highs. KeyCorp, I like this one. Really like this one. The regionals are a tougher trade, though. Lower probability trade, laggards within financials, laggards in the broader market. But I think the big guys, the JP Morgans, Wells Fargo, Citigroups, they're tipping us off that we want to pay attention. We want to pay attention to the regionals. I think this could be a great trade. 1485 or weakness right against its base, 13. Target of 20. There are some stronger regionals too, right? Where if the KeyCorps and the Truist and the M&T banks catch flows, the Bank Corp, which is already at new all-time highs, look at this monster base. We can redefine our risk here at 48 and a quarter. Target of 76. Love this one. Another one that's super strong. I put a starter position on this one last week. That's Merchants Bank Corp, MBIN. 41, long towards 53. Customers Bank Corp, CUBI. Really nice base shaping up here. Above the 62% retracement. We could use that as a nice stop. Target is 76. OFG Bank Corp. $30. Look at that base breakout. Looks a lot like TBBK, right? Another massive base. I think it follows the same path higher. We're going to hit that target soon. So look to the leaders in regional banks too. You know, OFG maybe not as actionable as the others, but QB against 49, 50. Merchants Bank Corp here. I know it's sloppy, but this one is, you know, showing as much relative strength or leadership as anything within the banking space. 41, or you could wait, you know, get above these pivot highs here. Maybe 44. Or the big banks, right? Any one of these reversals. Bank of America looks similar. Goldman Sachs looks great. Goldman Sachs, go look at my Twitter. I tweeted a chart today. Historic volatility crunch in Goldman, right? What do we know about when volatility contracts? It's only a matter of time until it expands. The only question is, which direction is the resolution in? Talking about that on the analyst call today too. I was saying we, you know, wait for this thing to break out. Let's get long. JC said, why not just a straddle? Play it in either direction. Because we know when that super high and tight, when that resolves, it's going to move fast in one direction or another. Let me hit the chat here. We'll get out of here. What's up, Abraham? Hey, Rachel, Ravi. Insider buying, SOC. We did not see that one. Are you sure it was open market? We have very strict rules in what we consider bullish insider buying. No planned purchases, no stock comp, no grants. It's when people or executives go to the open market and buy stock that they had not previously disclosed that they were going to buy. I had a great call with Koyfin about it this morning. They're doing some really interesting things with the insider filing data. So these guys, they come to us for advice on, you know, kind of how to organize and aggregate this data, because you go to the SEC website, or, you know, we've had feeds built for us that are directly to the Edgar database, and these filings, not even hundreds a day, thousands, and 99% of them matter not at all. So it becomes a real big like digging and filtering exercise where we end up throwing out most of it and just focusing on what we find really significant or material. Good afternoon, Curtis. One hole. No, I'm not de-risking taking protective action. Maybe I put less longs on recently, but no, I mean, let's see it, right? Sure. Is it set up for Nvidia to miss and a big, big red candles tomorrow across the tech space? Sure. Probably be some great buying opportunities. Let them dance. What's up, Doug Adam? Wouldn't Amazon be in your trans? It's a weird one. Jeff was saying that today too. No, I wouldn't put Amazon in the transport index. There are too many other things, right? Yeah, Key looks great. Key looks great, Alex. I'm looking at it. I'm already long, but thinking about adding. I really like the way that these financials look today. We got the Fed minutes coming out, I think, any minute, right? Capital One, yeah, merger stuff. I stay away, let that kind of settle. Sounds good. Sounds like some obvious synergies. You hear like Capital One Discover, and it's kind of like, why didn't they do this sooner? Makes sense. Any DGen Lotto plays? Nah, that's not for this show. Dixie, again, I could talk to you about the dollar or interest rates or a million other things, but it's about Nvidia today and this week. This whole bull market, some could argue and make a very, very sound argument. The whole bull market is really about Nvidia right now, particularly because of how thin it's been. It's this AI trade. It's driving everything. I don't think that's at all wrong. We've seen industrial revolutions drive massive stock market gains. The internet, right? Web 2.0. Maybe this is the latest one. I don't know. That's what some really, really, really smart people on Wall Street are saying, though. And they're putting some big, 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 big money behind it. Yeah, I'll be in the city tomorrow, Rachel. We are excited. Am I near 0% cash? Always? No. Late 21 and most of 2022, I was in a lot of cash. I basically take bear markets off and wait. And then in bull markets, I really press the gas. You got to make hay while the sun is shining. So yeah, when I'm very bullish, very, very, very small cash balances. During bear markets, I play a ton of golf. I fish so much, and I have massive cash balances. Yeah, it would be super bullish. We need financials to start working. We need other groups to really start working over longer time frames, right? From a breadth perspective, Q4 was great. And then it kind of went back to like the same old story where it got really thin again. We need ARK, we need biotechs, banks, financials, material stocks. Healthcare's made some nice progress. We've continued to see that kind of participation from healthcare at least this year, but not those other groups. We need them to buy in. Please talk Mara levels. The trade was made in Mara. You got the pivot highs. Here, I'll pull up the chart real quick. But the trade was made. It was great, and we're out. 30. So the pivot highs or weakness back towards where we were in just a few weeks ago. Is that 1950? Weakness back towards that base breakout level, 20, 1920. But I would much rather buy this one on strength above 30. You don't want to see a level get tested too much, right? We got the clean throwback and retest of that base just a few weeks ago. That was the time to buy it. Second retest, I don't know. You don't want to own that thing back in its old range, right? So Mara, I think you just be patient. It's not the time for Mara right now. There will come a time for Mara again, and we'll be talking all about it. All right. I think this was good, guys. Appreciate you too, Curtis. Thanks, everybody. Thanks for joining. As always, until next week, this was Hot Corner live strategy session. If you have questions, comments, concerns, want to say hi, drop us a note, info@allstarcharts.com. And until next week, join us on the morning show every morning, 8:30 to 10, right here on Stock Market TV. All right, everybody, enjoy the rest of your week.